Catherine, you're first up on the screens. 1 minute intro. Who are you and what do you do? Unmute yourself first.
Right, good idea.
This is a very serious meeting. Come on.
Well, I am very serious. So my name is Catherine Isgrant. I am an owner of boutique financial planning business that is named about retirement. So I'm money strategist and retirement planner. So as the name indicates, I specialize in retirement planning and providing strategies and ideas as to how to organize your money so you never run out of income. So you will actually be provided with the secure income for the rest of your beautiful life. So that's really what I do.
Okay, if I can get the next one past me to take over. Apparently we're not live, so I shall see what I can manage the technology.
Right, you want me to just introduce myself?
That'll be really good, Paul. Thank you.
Okay, so I'm Paul from Super Benefit. We look after self-managed superannuation administration. We also do small business bookkeeping and accounting software training as well, but our main focus is self-managed superannuation, just to try and keep them on track. We coordinate the audit and accounting and storage of all documents for past years, all the compliance that's required.
Fantastic. Thank you, Paul. If I can get the next person, please. In order of screen sequence, if that's possible.
I'll go next.
Yeah.
Hi, my name's Paul Ray. I'm the principal of Think Accountants. We're located in Melbourne. We're a boutique firm, half a dozen tax accountants and specialists, and we specialise in small businesses and high wealth individuals. Yeah, we're looking forward to hearing what everyone's got to say.
Sounds great. Thanks, Paul. I believe, well, whoever wants to jump in, fight over it, guys.
Hi, my name's Peter Griffin. I'm a solicitor in Brisbane. My firm's called PMG Law. My main areas of practice are property law and estate planning. And I've been working with Uva for 15 or 20 years now, and very much enjoyed the relationship, and yeah, I'm looking forward to a good night.
Sounds great. Thank you, Peter.
I'll go. I'm Melissa Mann. I've got a company called Thinking Big Finance. Predominantly, I help people with their finance to purchase properties, cars, self-managed super funds. We can pretty much do anything that needs financing. I'm based on the Sunshine Coast, and I've been a broker for nearly 14 years now, and I just love what I do. That's me.
Sounds great. I love people that love what they do. Who wants to go next? Mark, how about you?
So I'm Mark O'Reilly. I work for a company called Austbrokers Countrywide. I've been in the insurance sector, general insurance side for a touch over 30 years. I try to help people spend their money a little bit better, give them a whole lot of advice about the do's and don'ts and tips to try and help them protect their life's work and secure their assets by real insurance.
Sounds great. Thanks, Mark. David, you haven't had a go yet.
No, my turn. My name's David Forrest. I'm a real estate agent in Cairns with First National Cairns Beaches and Cairns Central. I've been in the real estate industry since, this sounds terrible, but 1980, and there to help whenever I can, and it's a pleasure to be here, Uva. Thank you.
Thank you. Yeah, okay. I think that leaves me, Uwe Jacobs, Property Friends. We provide solutions for people aspiring to financial independence, choices in retirement, or some people want to leave a legacy. So that's all good. All right, there's more people coming in, which is great. Let's fire off with the questions. Lenny, can you put the first question through that we had got previously, that we got through the email, and if you can put them in the chat window to everybody, that would be great. And then I'll direct the question for Melissa. Is now the best time to fix in my home or / investment loan? Melissa, what's your views on that?
This has definitely been the question of the last couple of weeks, if not since the beginning of January. So every second person is asking this question. I guess basically I always say, if you feel like you want to obviously have a set repayment for the next, between 1 to 5 years, definitely go for a fixed rate. I suppose it gives someone certainty of what their payments are going to be. I guess the only pitfall is with fixed rates, they're not very flexible. So you can't really pay, over and above 5 or 10 grand depending on the lender. But some banks are actually offering 100% offset accounts against a fixed rate mortgage. So you can sort of have the best of both worlds with certain lenders. I have banks offering rates from 2.09%. So I guess if someone's paying, 3.5% on a mortgage and they can lock it in for 2.09 for 1 or 2 years, and they're happy to stay in that property for that period of time, by all means, that's going to save a fortune by doing that. So I guess it comes down to, the client's situation, of course, and what the plans are with that particular loan and property. I'd never suggest fixing something in if you're going to be selling, because then you'd have to break that fixed rate, end up with a break cost potentially. So I guess it depends on the circumstance, and that's pretty much what we sort of investigate with all our clients before we'll go, yes, a fixed rate would be a good option for you.
Sounds great. Yeah, look, I think it's not a bad deal if you can log in at 2.09, but yes, definitely make sure that you want to keep the property. Okay, Lenny, shoot them out. Keep them coming. To Paul. Do I have to pay my employees the minimum 1,500 until I can get the JobKeeper reimbursement from the ATO? Unmute yourself, Paul. Unmute yourself.
Yes and no. Yeah, this is a really interesting one, and it's causing a lot of discussion. I've spoken to some of our professional associations who have spoken to the government, and they're basically saying, yes, you can, but what the government is encouraging people to do is obviously to pay the $1,500 minimum and then claim it back as a reimbursement. And that's basically how it's even reflected in the legislation. But that's really not practical for a lot of people. I mean, I've got one client with 20 odd employees that are part-timers in restaurants. I mean, he would be paying over $60,000 for those people that if he wants to take them on, and there's no way he can fund that because his business has ceased. And all the ATO says, you can go to your bank may, but there's no guarantees there. And of course, the question is, if you do pay them and then you don't get job seeker status, how do you get the money back? So these are quite quandaries, but the government has said, but not in writing or anything, I've said that you can basically back pay people, but the detail of that is yet to be provided. But the answer is, we believe so.
Yeah, it is a conundrum, and I have to admit that. I mean, look, I can admit that and divulge that information. The challenge of not receiving funds quickly from the government is putting not only our own business but also most other businesses under quite a bit of pressure. It's great the things that the government wants to do, both state as well as both state as well as the federal, but cash is king. So without the cash in your pocket and with the uncertainty, it's also fair to say that the legislation and the rules are still changing and new information comes to pass every day. So yes, definitely challenging situation. All right, next one please, Lenny. To Paul Griffin, I own an investment house and my tenants can't pay their rent. What are my legal rights?
moment, we're still waiting to see the legislation, and I saw that New South Wales had introduced a bill, but as far as I know, none of the other states have yet introduced the legislation. But the basic sort of things that they're saying in Queensland are there's no evictions for 6 months. So if your tenant can't pay because of the coronavirus pandemic issues, and they're financially affected by it, then you can't take action to evict them for 6 months. All of the governments, the national body and also the states are encouraging landlords and tenants to negotiate, and also suggesting that, of course, the bank, for most, the landlords needs to be part of that investigation, part of that negotiation, sorry. They're also providing for required mediation or arbitration if agreement can't be reached. And so you're going to end up either with the tenancy authority in the respective state, or the civil and administrative tribunal in the respective state having some power there in terms of getting parties together to try and resolve that. The issue for everyone is, to start with, is cash flow, of course, because if you have mortgage payments, your bank may defer. As a landlord, your bank may defer the payments, but it's not going. You're still going to have to make those payments, and the interest is likely to be capitalised, depending on what you can negotiate with your bank. And so then, at the moment, there seems to be this expectation that landlords will forego some of their rent, but for some landlords, I know that's just not going to be possible given the level of their mortgage on their property. So for me, first things first, if you have an agent managing your property, and David, I'm sure, will comment on this as well, as a landlord, don't try and start any negotiations yourself. Always go back through the agent and have them assist you with the negotiations with the tenant. That's part of what you're paying them for. And from there, it is a matter of negotiating and then looking at whatever is still coming in terms of legislation and regulations and further government announcements.
I'd love to hear David on that. I'm sure you got something to comment on that, David.
Yeah, look, I'd have to agree with everything that Peter said, and at the bottom of all of this is the need to negotiate, and I suppose that there's also a need for both parties to have some empathy with each other. You can try and butt heads, but that will get nowhere. The important part is to negotiate with some sort of empathy involved. I agree with Peter, it should be through your agent, because that's what they're practiced at doing. Negotiating is our forte. And, in most instances, we're seeing situations that are genuine. Every now and then we get someone that's sort of saying, oh, I need relief, but it's not actually due to coronavirus. And that's where your agent comes in, because your agent's we're trained to sort of qualify the inquiry and qualify the need. We as a network have specific forms for tenants to fill in, so that we can see that there is genuine need, and we can show that our landlord that there is a genuine need. And I think once everyone understands that there's a genuine situation, then there's an opportunity then to negotiate.
Can I add one thing there, Uwe, which is that the Queensland government is saying that it's going to, part of what the legislation it's going to pass is going to say that landlords can't require financial information from tenants. But I can't see how you can negotiate reasonably without some sharing of financial information. In order to be able to show that you're affected financially by coronavirus, I don't think it's going to be just enough to say, well, I've lost my job. So I think, and particularly if we're getting to a situation where people are being forced to mediate or arbitrate, again, you can't have a successful mediation or arbitration on rent reduction or rent abatement without both sides being probably more in the picture than they normally would be about the other side's financial situation. It just doesn't. So I think, despite no matter what the legislation might say, I think as a practical thing, that there's going to have to be some sharing of financial information on both sides.
Yeah, I certainly agree with that. This is a time for being reasonable, for being level-headed, and to discuss and to work it out. Melissa, that brought something up into my mind. Maybe I'm jumping the gun, and if I do, forgive me. One question that I have got going around in my mind and that I've been asked as well is, will a deferral of mortgage have an impact on my credit history?
No, basically, as long as the bank has agreed to that and it's under an agreement as such, no, it won't have an issue with your credit rating. I guess if you obviously just leave it go and you miss payments and whatever else, yes, it would. But I've been told by numerous lenders it's not going to affect a person's credit history moving forward.
Okay, thank you. Yeah, look, that goes in line with the next question that we have received for Catherine. Who can withdraw from superannuation now? Unmute yourself.
That's right, that helps. Yes, so outside of the stimulus package, so the money that government is paying to us, for the first time under a hardship provision, the government allows us to have access to superannuation due to coronavirus. But it has very strict rules as to who is eligible. And the very first thing is that you actually have to be unemployed. It's not just for anybody who wants to put their hands on super fund. It's one of the things that is also available to sole traders, that if you can prove that your turnover reduced by 20%, you are actually also allowed to make such withdrawals. So that's probably very few allowances have been made for sole traders. So that's probably one of the very few. One thing that I would say is, and I spoke with many super funds, people tend to go directly to super to apply for that. That's not how it works. You actually have to make application through MyGov, and everything is going through the government. You will follow the forms and all the questions, and that's the MyGov will organize everything with a super fund who will pay you out. Now, that withdrawal is available for this financial year and the next financial year. And ATO is the party that actually controls everything. What I would say, however, is that, in my opinion, you really would have to have no other choice. Like, you don't have any other money. And the reason why I'm saying this is, for example, if you are at the age of 30 right now and you make this withdrawal this year, $10,000, and the next year $10,000, and you are unable to make up later on those withdrawals, that virtually at the retirement time reduces your final benefit by over $120,000. So that's a huge loss. When you are 40, that's around about $65,000. So that's less, but it's very hard to make up those losses. So I would say that that's the very first thing that you have to really, sit down and just calculate, can I do it any other way? And the other big thing is, if your superannuation is of lower balance, obviously you can only withdraw whatever the value is. If you have $6,000, nobody will give you 10. But a big caution, if you withdraw the money and you happen to have your insurance within superannuation, that will lapse. So your super will be your insurance cover will be, will cease. So at that point, the question arises, if I go back to work, will I be eligible to get that cover all over again? And that can be a big drama for a lot of people. So that would be one of the things I would be really watching out for.
Paul, Humphrey, do you want to add anything to that? You're the super and self-managed superannuation fund specialist.
Yeah, I was just checking the ATO website just now to see if there was an update, particularly on in regard to SMSFs, and there hasn't been any change that I can find on the site. I just saw a reference to ASIC, but I haven't to see what they're commenting about. But the only comment seems to be that it's still the same conditions as the commercial large super funds. It still applies to a self-managed super fund, and just as Catherine explained there, the hardship conditions or 20% reduction and or redundancy, as well as a couple of other factors. Yeah.
Okay. There's actually a follow-up question that has just come through. How do I apply for the 10,000 release from super?
So you have to apply, as I was saying, through MyGov. And so you have to log in to your MyGov, and there is a set of questions that you have to answer. You have to provide a proof of loss of income if that's why you're applying. And ATO will cooperate with your super fund. Obviously, you have to provide all your details about which super fund is yours and your account details and also your banking details. So ATO will cooperate with your super fund, and eventually the super fund will pay you out. It's supposed to work within the period of 3-4 days. I mean, I hope so. I don't know, really. There are a lot of applications. There's no question about that. There are a lot of applications, and I know that super funds are overwhelmed. But the actual application is supposed to be pretty straightforward and easy.
The other factor based on this situation is that the market's down, and a lot of the super funds, the commercial ones, they're all invested in the stock market. So it means they're going to have to cash in some investments possibly at a loss. I know they do have a cash buffer, but if they're going to be hit by these huge withdrawals, wow.
That's true.
Not the best time, but then I know what else can we do. But
yeah. Okay, there's a question for you, Mark. If I reduced my rental, will there be any insurance issues to be considered?
Unfortunately, no, because insurance generally, as an industry, is always operated on the basis that there is an event. The event causes damage, and then that event then relays as the exposure down to the tenant. The tenant can't be there, so the tenant stops paying. So from a traditional insurance perspective, this current economic crisis, whilst there's a lot of people that are quite ill, and don't wish to play that down, but unless there is a direct link to the property in relation to a degree of an illness, meaning COVID-19, the insurance won't respond because there's no event that triggers. So a traditional loss of rent cover won't apply. A lot of the insurance policies sometimes have benefits in relation to different types of hardship and how that can be played out. And there's various rent default options as well. The challenge with a lot of those is you've got to go through your real estate agent. They've got to go via a tribunal process, and the end benefit is the insurance effectively pays you back based on the legal process that you would have gone through and followed. So insurance was always set up to really follow the legal process of traditional eviction. At the moment, because of the moratoriums, we can't really evict people. All the tribunals are effectively closed because there's exposures to their own staff. So no one can really hear a case. So then we have to circle back to the arbitration and mediation type revisions as an only mechanism to really help in this current environment. So whilst insurance in the traditional sense was there for all of the other events. So if we have a fire today, we have a water damage problem that we're still having all the time. So there's still lots of claims going through the system. Unfortunately, though, because of this economic crisis that we're in, insurance won't be an answer for that part.
Wow, that's interesting. All right. Next question. There's actually one for me. Aren't I privileged? I feel uncertain. Should I sell one of our 2 investment properties to safeguard our financial situation? Uwe is always talking about risk mitigation and cash flow is king. I guess I've been caught. Yeah. Now, that's a very personal discussion and question. I would prefer to have that discussion one-on-one, but as a general guideline, I guess it comes back to what is your situation? I would say that at the moment is not the best time to sell a property, no matter where, because of the uncertainty. People are sitting on their hands in general terms. And that means that you won't have the number of buyers that are potentially normally in a normal market out there. Cash flow is king. Yep, that's my statement. Having said what I said before, if you are getting tight, you'd rather sell before you get into real problems. Now, but one option that I suggest, and Melissa is probably better qualified to speak on it, is to set yourself up with a buffer in 2 ways. One, look at your expenses, and we've been through in the previous panel sessions on that, and reduce your expenses as much as you can. 2, look at your income. Are there other ways of getting income? A friend of mine is going and delivering newspapers. Not the most glamorous job, but it works. And it's giving him $450 a week, which is not a bad income. So, and I guess the third one is look at all the grants and other monies that you can access through the government, state and federal, and look at the I guess loans that are being out there. Melissa, maybe you can comment on that a bit.
Yeah, absolutely. I suppose unless you're obviously, and I'm no expert on when there's a great time to be selling property, but I suppose realistically, if you don't have the cash flow, by all means, look at other means of trying to increase your cash flow by, contacting your lender and asking them to put your mortgage on hold potentially for 3 months or 6 months. You could possibly sell stuff around the house, I suppose. I guess there's always ways and means about making ends meet. So I suppose starting with your finances, and I guess going down to the last dollar that you're spending on everything is a good place to start. Looking at insurance premiums, can you get a better deal elsewhere? Like just looking at everything if you haven't done that for a period of time. I'm only a fan of, I guess, selling a property if you have to. So I don't know. I think just chat to your team around you and just come up with an informed decision rather than just on the fly. That's all I can say.
Yeah, and I believe there are some banks that can provide unsecured loans that are government-backed, Melissa?
Yes, there's definitely some loans like that flying around. There's personal loans. There's, I guess, all sorts of finance options that you probably want to explore before you start throwing your portfolio on the market to sell. So I guess it comes down to situation. If you're currently working on it might be hard for you to apply for more finance. So I guess, again, just speaking to your team around you and getting some expert advice before you make any rash decisions.
Yeah, actually, there's a follow-on question that came through for you, Melissa. Are the banks still lending money? Can we still get mortgages?
Good question. Yes, they are still lending money. Some of the lenders, their turnaround times are fully blown out. Most of the major banks are pretty behind because a lot of their call centres are overseas. So they've had to shut off numerous call centres just for that reason. So these call centres overseas were dealing with the everyday type little admin things that now they don't have anyone to deal with. So they're having to, I guess, look at their internal employees to manage all this stuff. So we're finding turnaround times are starting to blow out. Some banks are still, looking at a day or two before they'll pick up an application. But in saying that as well, there's been a few emails flying around the last week where lenders have pulled the pin on certain industries. So they won't lend to, at the moment, this could all change, but they won't lend to hospitality and tourism, industries such as like airlines and travel, and casual employees is a big one. A few lenders have just pulled the pin regardless if what industry you're working in. If you're a casual employee, they won't lend to you depending on. They've scaled back on bonus and commission. Normally some lenders will take 80% of that, or sometimes 100%, and some lenders will only do 50 at the moment. So again, this is sort of changing daily. And as I said in the last webinar that we did, was if you can get your finance sorted, don't wait. You're better off to try and get it done now, because who knows what lending's going to be like in the months to come. The banks could really tighten up, and you know, we might see another GFC, I suppose, from a lending point of view, which I think the floodgates will sort of open eventually. But I mean, at the moment, that's pretty much how it stands. So it's changing daily at the moment. Good times.
Yeah, it's interesting times, that's for sure.
Yeah.
Message or question for Paul Ray. By the way, I don't seem to be able to get the live stream going on Facebook. I've tried about 5 different times. So it's just one of those things. The internet gods are not very welcoming to us. I'm trying at the moment to go through to YouTube, but we'll see how it goes. Now, there was a question for Paul Ray. Am I eligible for JobKeeper if I only draw director's fees from my company?
Yeah, this was a good a bit of a question raised some weeks ago. The ATO now addressed this. I mean, there are people who just draw directors' fees from companies. There are those who have trusts that just take trust distributions. So they're technically not, if you like, employees as such, but the ATO has addressed this and saying that only one director who's working in the business, or any one beneficiary, once again working in the business, can be nominated for the JobKeeper.
Ah, so that, just to clarify for me, in our case where we've got 2 directors in one company, only one of those 2 directors could claim that. Correct.
Did anyone get the text message this afternoon about 5 o'clock from the ATO in regard to JobKeeper? Yeah, I got a text message, and so I went quickly on the website. They have put about 12 or 15 pages on about JobKeeper today. Must have been
the fact sheet. Yeah, I've seen that. Yes.
Yeah. And they also clarified that, and I'll just read this out, employees who were stood down or on long-term leave. This is a question because a couple of my clients, they've had to enforcedly close their businesses, such as a trampoline park and a beautician. Employees who have been stood down for work under the Fair Work Without Pay may still be eligible employees as long as they are in your employment and meet the eligibility criteria. You will need, and this is the employer, to have paid them at least the minimum amount of $1,500 each fortnight, of each fortnight you claim for to receive the payment. So they're still saying that you need to pay it. And I just think it's impossible for businesses that have had to be forcibly closed. They've got no money.
Exactly. And there is that question that the ATO put on one of their fact sheets. What is it? What happens if I don't have the money to continue paying my eligible employees until the payments are made? They just say, once again, it's a reimbursement scheme and you may want to speak to your bank and the banks may be able to assist you. So the verbal response from the ATO is, look, don't worry about it. You just have to back pay them. But that's about as official as we've got. And, it seems to be, hopefully, the ATO taking a common sense approach here, we all trust. And I know that they want to support businesses and support employees. So, I think they have to, or else you're just going to have so many businesses just won't be able to qualify if it has to be.
I just touch on that as well. I was looking into the business loan, the 250 grand, all these banks are offering this business loan. So I was looking into it today. So generally speaking, By the time you put an application into funding, that's anywhere between 2 to 3 weeks. It could even be longer depending on these applications that come through. So I guess that's a fair chunk of time that a business is not going to have any income. So I honestly don't know what the answer is there. I don't know if those turnaround times are going to become better, but that's what it is at the moment. So
that makes it very challenging. Question for Paul.
Which Paul?
Paul Humphreys, please. Sorry, my apologies. I'm not used to be surrounded by so many Pauls.
Just lucky, I guess.
Yeah, I'm just a lucky fella, aren't I? Paul Humphreys, I take it that's for you. Do I repay the 10,000 release from Super?
Yeah, my understanding, Catherine might know a little bit more, is that no, you don't have to repay that. I think Treasury documents clearly stated that.
Catherine?
No, that's a withdrawal based on hardship provisions. So absolutely nobody's expecting you to repay the money. That's correct.
All right. We've got a question from Paul Murray. If I suspend trading as a small business with under 10 employees, can I still claim the JobKeeper allowance for each employee during the period of suspended trading in order to pay employees?
Well, the answer is yes, you can. As long as they're eligible employees, they meet that criteria, and you nominate them. So you would nominate, obviously, the employees that you need to keep that you want to keep going forward and to run your business. But you certainly can, yes. I mean, there are many, obviously, businesses in that position. They just have to cease.
Okay. Thank you, Paul. Right. Again from Paul Murray, is SGC payable on JobKeeper allowance? Is the JobKeeper allowance subject to PAYG? And is there a fact sheet on the process of receiving JobKeeper payments from the government?
Well, once again, your PAYG withholding is required. So if you're paying someone under the minimum, you're paying up to the minimum of 1,500, then you would have to withhold any PAYG. And if you're already paying them above that, well, you'll just be withholding what you would normally withhold. Super guarantee is only payable on the amount above their normal wage. So you don't have to pay the SGC on the make up to 1,500. So if they're on 1,000, you're now paying 1,500. You don't have to pay the SGC on the 1,000, but you can, if you want to.
Right. That's interesting. Anybody wants to add anything to that, or no? Okay. Next one. And we've been there. On the employee payslip, do I need to create a separate pay category for the JobKeeper allowance? Which webpage, treasury.gov/coronavirus/JobKeeper.
Well, you don't have to include a separate category. I guess you could if you wanted to, but there's no requirement to do that, no.
Okay. Thank you. Question for Peter Griffin. I own an investment house. What if my tenants want to move out? Unmute yourself, Peter.
Sorry, it just took me a minute to unmute.
No problems. It's technology.
Again, we haven't seen the legislation, but in Queensland, at least, the government is saying that it is going to allow tenants who can prove that they have been affected by, and again, the wording, I haven't got the exact words in front of me, but it's that they've suffered financial detriment as a result of the coronavirus pandemic to give notice and leave. So that's what the Queensland government is saying. It's going to be different. It's going to be different state by state, and we're not going to know how that's going to work until we see legislation.
I guess that's the part of the conundrum. New South Wales has I'm not sure who, I think David referred to it. New South Wales announced a $440 million relief package for landlords, whereby it's supposed to be shared 50% commercial, which other areas have advised as well, but also 50% on residential, which is a sigh of relief for certainly the New South Wales landlords.
Who pay land tax.
Beg your pardon?
The New South Wales landlords who pay land tax, because my understanding that the relief is from payment of land tax. And so if you're a landlord, New South Wales landlord, my understanding is if you're a New South Wales landlord who doesn't pay land tax, then I don't know that any of that 220 million is going to benefit. I'm talking about residential, is going to benefit you. And the number that I heard today was somewhere between 16 and 20% of the land tax that's paid in New South Wales comes from landlords, commercial and residential. So the suggestion being that that the number sounds good, but it's not money being paid to the landlord. It's relief from paying land tax, and there are a lot of landlords who don't pay land tax. And I would think there would be even fewer landlords, and particularly residential landlords in Queensland, for example, which is the jurisdiction I know, who pay land tax. So let me put you on the spot, Uwe. Do you pay land tax on any of your residential properties in Queensland?
In Queensland, no. In WA, I made a big mistake. Yes.
Yeah, but in Queensland, unlike New South Wales, land tax is based on and a lot of people own their residential properties in trusts. Each different trust is a different taxing entity for the purposes of land tax in Queensland. Whereas my understanding about New South Wales, and I'm not an expert in the New South Wales law, but I understand that New South Wales put the properties together, no matter how many trusts they're in. If they're a related entity to you, Uwe, then your land tax in New South Wales is based on the combined value. Whereas in Queensland, you can separate out the properties, and that's why the Queensland government has also been offering some land tax relief. But again, it's going to be, my understanding would be, it's going to be mostly commercial landlords who would be getting that relief. I think a lot of residential landlords, except for maybe more upmarket properties in Brisbane and perhaps Townsville, they're not paying land tax anyway.
Yeah, look, you're absolutely right. And of course you're right, because you're the specialist. But Victoria is the same. In Victoria, the land tax starts with the trusts from zero, and you get aggregated over different entities. Western Australia is the same. Again, you start with zero, and even the private people start with zero. So it just depends on the legislation, and this issue just proved a very, very valid point. And I can't stress that enough. And this is the real reason why we put on these panel sessions. Speak to your experts. Don't believe what Joe Blow at the barbecue tells you. That's why you've got advisors around you. That's why we've put these panel sessions on. And I just proved myself that I need to go back to the experts, and this panel of experts is available to you. Lenny, if I can get you to pull up the websites of everybody and just put them in the chat, because what we'll do is, for the people that are on this meeting, we'll distribute the recording and the chat. Is that okay with all panel members? Just give me a thumbs down if you have a problem with it. Okay, everybody's thumbs up. Okay, thank you. So yes, what we'll do is we'll distribute the recording with the notes. If you can please put the websites of everybody up, Lenny, that would be magnificent. There's actually one question that came in for me. What is the situation around landlord-tenant with mandatory code of conduct as described by ScoMo? I think we've covered that. There is lots of uncertainty around it, and the issue is unclear in a lot of ways still. I guess be reasonable. That's what I'm saying. If I can actually follow up to David, I had a discussion with one of the landlords in your jurisdiction. I'm sure Claire won't mind. She was going to be on, but she doesn't seem to be. The situation is that the tenant had been put on notice and had actually been given notice to leave. They don't find apparently any rental accommodation of a different kind at the moment. And of course, Claire is here. Okay. Well, I'm just asking you a question, Claire. Okay, let's continue. The tenant can't, or finds it difficult, can't find accommodation at the moment. And as a landlord, Claire is concerned about having her property vacant at the moment. I know that you can't give specific advice, but what would be your general views on that, David?
Yeah, look, the tenant, I'm not sure whether the tenant actually gave notice or we actually gave notice at the end of the day.
The landlord gave notice.
Yeah, the tenant's issue was the fact that the tenant was poor in their behaviour in terms of payment. And we had this discussion, I think, on our first panel, and my comment was, in my opinion, it's unlikely that the tenant will change their behaviour and that we should continue on with the sort of the notice. Since then, the property that becomes vacant on the 25th, I believe, hasn't been relet. That's not to say that it won't be relet. I think we have an appointment tomorrow with a client that we've dealt with in the past.
Okay.
And who'd actually cancelled on a meeting late last week. But they're known to us. The issue then goes to a point where the tenant has made apparently about 10 attempts to lease another property, but in each of those attempts, the agent has sought the current ledger, which has shown that the tenant has not been a good tenant. And so therefore they're not getting a property. The tenant has since, and Claire has provided this information, has since, I suppose, almost begged to say that they want to stay on another 6 months, and would the landlord consider that? And that's the process that we're going through at the moment. And there's no need to make a decision quite yet. But the issue here is something that I was talking to you about earlier on, in that there's a need for empathy on both sides.
Yeah.
The tenant, if we do lease this to another property, then there's a high likelihood, well, there's a very good chance that the tenant's going to struggle to get another property elsewhere. So you've got that sort of moral issue that you need to deal with. And these moral issues, they develop grey areas. There is no yes and no in this particular instance. Is there an opportunity here to negotiate an outcome? My theory is one of those opportunities may well be that needs to be very clearly explained to the tenant that the reason why they were kicked out, or not kicked out, or given notice, was because of their poor rental performance. And the reason why they're not getting another property is again because of their poor rental performance. And so would they have a heightened motivation to behave better and pay promptly? I think they probably would. Having been in this industry for a while, they're not going to get, and in an area where our vacancy rate's under 2%, they're competing against people that have behaved better than they have. So in this particular instance, there may be an opportunity to negotiate. Other parts to this story are that the the male partner in this particular instance is working in Perth. He's working in Perth for the duration of the coronavirus. If he leaves there, he's unemployed. So he is going to work there for the entire time, as long as he can, and support the family. So all these things I'm pointing to you are areas where there is a need for empathy and a need to negotiate. And I think that this is at a point now where I think we need to actually make a couple of decisions in terms of what we can say and do with the current tenant.
Peter, did you want to add something to that?
The Queensland government information about this sort of situation, Uva, is, and I just wanted to add this, it says that a notice to leave issued before 29th of March will still apply if it was for rent arrears not caused by financial distress due to COVID-19. So that's the legality, although again, we're yet to see the legislation or the regulations that are going to back that up. But that's what's on the government website. Otherwise, I fully endorse what David said. It's a situation, yeah. All these situations are situations for negotiation, and they all have those grey areas that David's talking about in terms of what's the moral thing to do.
Yeah, and again, I come back to the point, let's fly like eagles. We are surrounded by great advisors. If I was in that situation, Claire, I know we have chatted and I have given my views on it, but really David and his staff, your rental manager, they're at the front line. They know the local position best. I'm 2,500, you, Claire, are 2,500 kilometers away. I always suggest ultimately to talk to your advisors. Heck, that's what we have their service for. That's why they are our advisors. So yeah, it's good to bounce things around, and ultimately I would go back to my advisors. Okay, there was another question from Paul Murray. If a long-term employee is on unpaid leave as of 30th of March and will continue on unpaid leave for 12 weeks, is that employee eligible for the JobKeeper allowance from 30th of March? I guess that's to you, Paul, right?
Yeah, well, the answer is yes, unless they're in the receipt of a government parental leave or dad and partner payment. If you're an eligible employee and your employer is an eligible employer, then you're eligible whether you're on leave, stood down, or working. So the answer is yes.
Okay, I'm sure that's good news to Paul. Okay. Question to Catherine. This is going well. I'm enjoying that. What is the expectation of the stock market after such a big crash?
Yeah, it's a big question. I think everyone wonders, really. And
go on, polish your crystal ball.
Yes, if I only had one. I don't want to finish that sentence where I would be at that point. But look, I mean, obviously what's been happening with the stock market affected absolutely everybody. At the end of the day, you know, superannuation generally is for most people the second biggest asset after family home. So it's sort of everyone is affected, and I'm not surprised that people are worried. And the press and information on the news that are constantly you know, not encouraging, they're pretty bad news, that helped market behavior, because that scared a lot mum and dad. But and officially, I actually heard that officially we are in bear market, and this is actually the 9th biggest bear market in the history since 1928. So when we look back to when American stock market started, So the drop is 36%, and it happened so suddenly that the severity, that's where the shock probably is. But at the same time, all governments across the world, they introduce fiscal stimulus, and that introduced a lot of, I wouldn't say certainty, but a little bit softening of the market. Plus, where we are right now is probably the market has completely included all the bad information that exists around in the world. So the market really priced in everything, all the bad news. So, and this is probably why withdrawals from those super funds are such a bad news. It's really not a good idea to try to withdraw any money, because you are really accepting all the losses, and unless you're really struggling, you should not be doing that. Now, going back to the expectation, really at the end of the day, every single super fund, every single fund manager, they are trying to figure out based on behaviors of the market in the past. So they are sort of analyzing all their prior drops. Can we draw any conclusions? Is there any similarities? And we had, like I said, this is 9, so we had 8 before. The difference with this one, however, is that every single one before that, before current drop, was accompanied by something else. It would have been either banking crisis or oil crisis. Something else was happening, and this one is completely different because it's not due to any other forces. It's a very medical experience. So that's why probably hard to withdraw any conclusions from the past. But really, from what I read and from what I hear, market is virtually just waiting for good news. And you've noticed in the last 2 weeks, the market started really going up slowly. So the question right now is, will we have a V-shaped market, what they call? Will we have U-shaped market, or will we have L, which will be very long wait for the market to recover? Obviously, nobody knows that, but once we hear information about the virus being contained, that will be very big news for the market, obviously. And the fact that all governments have contributed so much money to help us and to help economy, that will help as well. So what I would say is, I think that we've gone through the worst. I have noticed a lot of people already buying back to the market because at the end of the day, we have very, very cheap stock around, but you have to have a little bit of, guts to do that, I think, for a lot of people. But I would say that nobody's expecting the market to fall all over again. The question eventually is, how long will it take to go back to what it was before? And that's a big question mark, really.
Mm-hmm. If I could just add something to that, what Catherine is saying too. In Australia, we only report every 6 months. So the last reporting period is just finished. The December half year was reported through January and February, and that's basically finished. Our next reporting season in Australia is for June, and that is over the July-August period, and most of the information doesn't come out until 6 to 8 weeks after the end of that half year. In America, however, they report every quarter. So March is just finished. They'll start reporting in the next few weeks. And I know some analysts are actually just waiting to see what's going to happen, what sort of shocks are going to happen in terms of particularly the big companies, what effect has been the economic downturn in America, and that usually causes a little bit of a ripple, particularly in Australia as well. So there's a good chance there will be a bit of a fall again, particularly, but not like what we've seen, if their reporting season is not as good as we'd like it to be.
Yes, another thing that you probably heard is the fact that some companies already are advising that they might be cutting down or cutting off completely on paying dividends. That will also have an impact.
Yes.
I know that banks assured that they will continue paying their dividends, but a lot of other companies that are struggling with cash flow, or otherwise they prefer to retain cash rather than pay it out, that may also have an effect.
Yeah. There's another, thank you, Catherine and Paul, and thank you for the whole panel. This is really good fun and really great information. Another question for Mark. Will my business interruption insurance cover me for any loss of revenue? You got to go, David? Okay, look, David has another appointment. I'd like to thank David for coming in. That's been really valuable. Thank you very much, David.
Thanks, David. Good night, everyone.
Good night.
David.
So the question was for Mark, will my business interruption insurance cover me for any loss of revenue, loss of rental suffered as a result of the COVID-19 virus?
The short answer to that is no. The trick to that is under a business interruption policy. So we're talking more commercial or much larger industrial versus residential. So a business interruption basically responds where the tenancy stops paying rent because of an event. So the event rule applies in a residential sense as also in a commercial or industrial sense. So unfortunately for most landlords at the moment, insurance won't be part of the answer. What always happens with insurance though is there's always a test case, because the words of a policy are sometimes what they intend to say versus what they can say in a different context end up being different. So every time there is a big event, every time there is a big disaster, the insurance industry gets called into question. It was never intended that the insurance sector would pick up this type of economic exposure. Probably the government never even foresee this type of exposure happening anyway. So the insurance industry as a collective has already made a number of statements to say it was never intended, the policies don't respond, and here's a set of words around how that particular policy for that particular insurer responds. So there's a collective answer to that. There's a number of people that are already testing and challenging some of those words and their meanings, and trying with, let's assume, the best intentions to protect the people who are being vulnerable and don't have the money. So we would anticipate that at some point in time there will be a test case, there will be a couple of rulings, and then we'll go back to that particular group of clients with that particular wording. But for the minute, there is no cover, but the floodgates may open, and the challenge to that, like a lot of sectors, is if the insurance as a collective industry is asked to pay for this level of economic impact, it will be in the billions of dollars as a collective claim to the whole industry. How would the industry then respond is a whole nother challenge to that. So just because if we want to push it and get a claim paid, it then has ramifications down there, so the insurers don't have the money to then pay the other claims that, such as the bushfires and the hail and everything else they were called to pay in the past 6 months. So there is a double-edged sword. We expect it to come, but that'll be a bit of a watching space. So the short answer is no cover at this point.
Okay, thank you, Mark. A question from Paul again, and this is probably going to go to various people. So allow me to jump in first, and then probably Paul, Catherine, Paul Humphreys, Paul Ray, whoever wants to join in. The question is, what may the effect on inflation be from quantitative easing, printing money? So very simply, and I'm not the expert, so don't take any notice of what I'm saying. I've just been around the block a couple of times in the last 17 years, including a period where we had 18 to 25% of interest rates and very high inflation. It is no doubt in my mind, as a novice, and just my private opinion, that we will have higher inflation. It has to come. The value of money is decreasing, And if you're a landlord, that is magnificent. If you are somebody sitting on returns from income from shares and so on and so forth, there may well be a difficult time. As a property investor, good times ahead with high inflation. Who else wants to jump on that question? Nobody. Too hot to handle. Come on.
I'll jump on it. I'll jump on it because I'm probably the least qualified to talk about it. So
good on you.
What I think, it's much more of a global issue, because when you look at inflation, certain economies will prime their economy, and then money flows more globally than it ever has. And I think other economies across the whole of the world will be pumping their economies in a much greater circumstance than Australia. So we may be the beneficiary, or it may have a negative impact of what other countries are doing. So when the US announced, I suppose, stimulus packages in the trillions versus Australia worrying about $1 billion, the inflationary effect, I think, will be mitigated somewhat, because it will end up being a worldwide issue, and other parts of the world in relation to the deaths and how long they're going to take to recover will be much, much bigger than Australia. So I would hope from an inflationary perspective, we actually might be better off when you look at it across a global context of what's going to happen elsewhere.
Okay, very interesting. Paul and Catherine, you want to stick your neck out?
Well, I'll just say that economics was never my big subject at university, and it was something I didn't really want to get involved in on that sort of level. Look, my answer is, look, I really don't know what's going to happen there. You know, so I think what Marco was saying has some great logic behind it. So yeah, I'd go along a bit with that, but I really don't know what's going to happen there.
I was just looking on Investopedia, and they were saying that often inflation is a result of things like quantitative easing and the production of money, but it doesn't necessarily always work out that way, and it didn't necessarily work out after the GFC in every country. As Mark was saying, there's always different factors, and as Catherine said, this is a very unique situation, so who knows what's going to happen.
All right, that just proves the point. I know nothing. Catherine?
And I completely agree, because when you think about it,
I don't know anything. That's good. Love
how
you.
many? Well, money printing has been going on since GFC. It's not the first time that governments are utilizing this sort of way of helping economy. So, and every single time I was wrong about this. I expected the market and everything to go the other way, that it will happen. So I'm not going to even say one word about it, to be honest. But yes, because this crisis that we are experiencing now is so different to anything that we had prior. It's very hard to predict.
Well, I agree. So anyway, that's all good.
Another question there, Uwe.
Yeah, thank you. And by the way, in the chat are now all the websites of the entire panel. I do suggest and recommend everybody to get in touch with people that you have questions with, or where you're seeking advice. Another question: with increased government debt, when this crisis diminishes, what can we expect from the government to pay off that debt? Who's got a good crystal ball? Let's polish it.
Well, yes. Well, look, clearly the government's going to obviously have to reduce their debt, but I mean, obviously there'll be massive debt here, but I think they'll be careful about how they do that. You know, if they act too quickly, it can have a really damaging effect on the economy. So I think this will be a gradual increase in certain taxes, etc. I think the GST is probably back on the table. They'll certainly be looking at it very strongly. We notice they always have their greedy eyes looking at superannuation, so I wouldn't be surprised to see some changes in there. But I think, I think they'll be careful not to overreact and try and tax us too heavily or increase too much too soon. But it's going to take a long time to pay off this debt. There's no doubt about that.
There's actually been a question out of my own ranks. Our daughter is just about to enter the market, and she said, "Dad, is now a good time to purchase?" And I want to answer that from a property point of view, and I'd love to hear also Melissa on that from a lending criteria point of view. So from my point of view as a property strategist, it's a heck of a good time to purchase if, and I'm going to use a very technical term here, if you've got big kahunas. You're going to need some big backbone and definitely a good deposit. And I would like to hear Melissa on that. But in my view, it is a great time to purchase. The reason why I'm saying that is I'm coming back to, in uncertain times, people sit on their hands. There will, and there are already people entering the market that for unfortunate reasons have to sell, whether they're over leveraged or whatever reason there is. So when others are fearful, be greedy, is what Warren Buffett, I believe, has said. Melissa, what's your comments in regards to the lending for new home owner buyers?
Yeah, nothing honestly has really changed in that aspect. I suppose it all comes down to if that particular customer or client can substantiate a loan payment and they're still working. So as long as you've got a deposit, you definitely need at least a 5% deposit. Most lenders are pretty much at a capped 95% these days. So that includes your mortgage insurance. The only other option I guess, still have open is guarantor type loans. So if mum and dad can put their property up as a security, for one, you can avoid mortgage insurance, which is fantastic. It's a massive saving. Two, you'll get a better interest rate. But I guess the thing is with guarantor type loans is that, the guarantor needs to be in a situation where they can actually go guarantor for you. So all the banks these days, and I always say it up front with every client, is that it's definitely beneficial to seek independent legal advice and financial advice. At the end of the day, the bank just wants to make sure that, you've crossed your T's and dot your I's, so to speak, and it's more of a responsible lending side of things. So look, nothing has really changed. We're still doing a lot of first home buyer type loans. If anything, there's a few more responsible lending questions that are flying around now these days regarding stability with income, stability with your employment, genuine savings. So it's all pretty standard stuff. Nothing much has changed there.
And it makes certainly for interesting times when I hear about online auctions and things like that. The world has changed to a degree, and the ones that can roll with the punches, or in my famous saying, blessed be the flexible, for they shall not be bent out of shape. On that note, we've been going an hour and 20 minutes nearly. If there are no last questions, I'd like the panel to just any final words, take a minute. If we can start with Catherine again.
Well, I mean, first of all, I must say that I've really enjoyed participating in this panel. So thank you again, Uwe, for inviting me here. And the great thing is that each one of us operate in their own environment, and it's not just only that we are passing on information to whoever is listening, but I actually picked up quite a lot of knowledge from all of you, so I really appreciate that. It's really great to be in a company of people who specialize in their own little area, and also I think that it's great to get to know you, because at least this way I know that if I have a particular problem, or not me personally, but let's say my client, I know that I met people that I can actually contact and can assist me. So I think that it's not only beneficial for people who are listening to us, but also actually for us as well. So it was really great pleasure to be with you here and listen to you and participate. Thank you very much.
Thank you. Can I pass it over to you, Melissa?
Yeah, I totally agree. It has been fantastic. I guess we all get bogged down in our everyday businesses, and it's hard to keep on top of everything. So I guess by having an expert panel like we've got here, just to bounce anything off that we might come across, it's gold. So I've really enjoyed it. Also, I sort of feel like we sort of need to maybe do one in a couple of weeks. I don't know. So I'm definitely down for that. Everything's changing quite rapidly. So, yeah, thanks again, Uwe, for organising everything. It's been great.
That's a pleasure. Thank you. And then, by the way, that may not be a bad idea. I'll check with the panel what we can do there. Paul Ray.
Yes, yes. Once again, thanks, Uwe, for the opportunity to be in such a esteemed company. Yeah, my main comment, as I say to most of my small business owners and that thing, is the paramount thing at the moment is to conserve your cash until you understand what your financial position is. Once you know what may be available in the way of government assistance through JobKeeper and state government grants, etc., then you need to do your cash flow projections, see what all that looks like, and then talk to your team, talk to your landlords. It's all about communicating and just making a way forward, but doing it in a planned way. And once we know what your position looks like, then go and talk to the tax man. He'll be more than helpful to put in place some longer term payments at low interest rates. So don't pay anything just yet until you know what it is, then negotiate.
Mark O'Reilly.
I'm one for bold predictions. So I'm tipping, if we have a catch up in a couple of weeks, the V curve that was talking about, whether it's a flat or it's a U or it's a V, I'll put a tip out there that it'll be a V. We'll continue to rise as a market. Basically, the reason for that is I'm sort of following the news cycle like everybody else. I think there's a lack of negativity at the moment, and it's very different to what it was a couple of weeks ago. So Australia is beginning, albeit it's very early, but we're beginning to come out of it. So I'm quite buoyant, mindful that this is very much a short-term issue. So we'll see how all that goes, and you can all rib me in a couple of weeks and see how short-term and short-sighted I was.
Geez, I sure am glad that there's somebody else that is willing to stick his neck out. I love that about you, Mark. That's good fun. I can take screenshots, Paul. Anyway, that's okay. You do it that way. That's fine as well. Yeah, look, nobody can foresee the future, and time will tell. Peter Griffin, any final comments from you? Paul Humphrey.
Yeah, can only reiterate what's already been said. So thank you, Uwe, for all the tireless hours you've put into setting all this up and learning all the new techniques that you need to learn. So thank you for doing that and promoting it. It's been very good. And yeah, and I'm standing in awe of all the rest of you and all your knowledge. And it does boil down to you've got to have specialists, because you can't be a generalist. You just become a master of none. So well done to everyone else as well. And thank you for all your insights.
Well, I'm lucky last, so I can have the last word, which I really enjoy. Look, more on the serious note, thank you everybody for attending. Personally, I think that we've created something special here. And when I look at the number of years of experience and the wealth and the breadth of experience. Now, Paul, it's okay. I got gray hair as well. So the breadth of experience and advice that we can provide, that's something that I'm proud of, and we all can be proud of. Okay, I think I've got everybody covered. Thank you for the people that were online. I can see Renee, I can see Paul, I can see another Paul, and of course we had Claire on the line. Unfortunately, I have not been able to share this to Facebook, so we'll download it and see what we can do there. By the way, on Property Friends website, this is locked up to the members only, which you, of course, can become a member. Each panel member has got their contact details with a lovely mugshot and a 2-line bio. So the resources available. Have fun, enjoy, and let us know when we can help. All the best. Thank you very much, panel.